Hey everyone, today we're going to revisit Netflix. About a month ago I put out a video and my conclusion was that Netflix was slightly overvalued, but not incredibly so, assuming they could average an additional 18 million users annually to the platform, which would be about 8% user growth down to 5% user growth in a decade. This was much lower than their historical growth, so it actually seemed relatively reasonable. And if you've been following Netflix, they actually just released Q1 earnings and guidance. The Q1 top line was good. It represented about a 10% growth year over year, which is going to be mostly attributable to the users in Q1 being larger than the users in Q1 last year. But the big surprise was that for the first time in probably a decade, their total number of paid subscribers dropped quarter over quarter. So while year over year, users are up 7%, they're down 200,000 users from Q4 of 2021. They also have provided guidance for Q2, and they actually expect to see 2 million additional users leave the platform. So it's safe to assume through the first couple of weeks of April, they actually started to see attrition. And so now the market's reaction to this wasn't that surprising, I guess. It's the same thing we saw happen to Facebook. As soon as slow or no growth was reported, the stock lost a significant amount of value, dropping from a high of around $350 a share down to $210 a share, wiped out over $50 billion in market cap overnight. I know this video is on Netflix, but a quick side note, I think missed earnings and the realization that supercharged growth won't continue forever is actually going to be this large catalyst that wipes out a lot of market cap for a lot of these kind of high-flying stocks. Tesla, you better not have slowing deliveries anytime soon. But anyways, back to Netflix. I figured I'd update our model from a month ago and see what assumptions we actually needed to make to justify the current market value, and then see if that is actually reasonable or not. So opening up my prior model, I've actually adjusted down my user growth assumptions. I've held them to 3% user growth every year, which I think represents roughly an additional 6 to 8 million users added annually to the platform. Now I've assumed larger price increases though on the assumption that if users aren't growing, revenue is going to have to come from somewhere, and in this case, it's going to be at the expense of the consumer through price increases. However, in reality, they announced they're working on adding advertising into the platform, so these price increases kind of represents that revenue stream as well, so there won't be as big of a financial impact to the end consumer. But the modest user growth has them going from 220 million users currently to about 300 million users in a decade. According to Netflix, they already have 300 million users based on password sharing across accounts. So this really just shows their ability to capture the market they claim they already have. So with these projections, we get a valuation between 91 and 96 billion, which is roughly where the market is valuing them now. So the market is basically saying very slow growth with no improvements to margins. Seems a bit harsh, so I decided to make one adjustment. If Netflix isn't going to see significant growth anymore, they probably won't continue investing in content at the same time. So we will improve margins in another scenario and see what type of valuation we get in this slow or no growth model. In this scenario, I've slowly reduced the level of investment in new content, dropping from 18 billion in 2021 down to 13 billion in 2031. In this scenario, we get a valuation between 116 and 122 billion, which represents about a 27 premium to the current market cap of 96 billion. I personally think the market has overreacted to this news, similar to that of Facebook. Now, I don't think Netflix will ever get back to the growth levels they had during COVID, but modest growth, around 5 to 8% user growth, probably actually isn't out of question as they penetrate foreign markets. I actually still really like the model from a month ago and think a valuation around 150 billion is actually probably pretty reasonable. It'll take some time for Netflix to continue expanding into these international markets, but I don't think one quarter with a decline in users when you have 220 million users is the death of Netflix. So that's my take. I think if you're looking for a good company and a cheap price, Netflix might fit this criteria. But before making any investment, I would highly encourage you to look further at their kind of country level data, learn more about the advertising commercials they're going to be seeing, and any other monetization avenues, and maybe even wait a couple quarters and see how it plays out and to see how those trends in coming quarters happen. But as always, thanks for watching. I hope you found this useful, and please like and subscribe.